I'm Danielle Hale, Chief Economist at Realtor.com, and here's what you need to know about the economy and housing market in this last week of January. Taking a look at the big picture, the U.S. economy grew in the fourth quarter, but at a slower pace than in the prior quarter. Although consumers boosted activity, investment was a weaker spot. Meanwhile, consumer confidence softened, which could herald slower economic growth ahead. As the economy grew, prices picked up too. In the measure favored by the Fed, overall inflation accelerated, but core prices, an underlying indicator of future inflation pressure, steadied. The Fed met and decided to leave its policy rate unchanged in January. In the ensuing press conference, Chair Powell called current policy meaningfully restrictive and noted that the committee did not need to hurry to make additional policy adjustments. Market investors largely expect the Fed to be in its current holding pattern until June. Mortgage rates steadied this week, hovering just below 7%, but they remain more than 80 basis points above their September low. Some home sales data began to show the effects of more recently higher rates. Pending home sales, an early-stage indicator for existing home sales, which are based on contract signings, slipped 5.5% in December, and they were also below year-ago pace. However, new home sales ticked higher. The latest Realtor.com New Construction Insights report showed that in the fourth quarter, the median list price of new homes slipped, and the price premium for new homes over existing homes also shrank, which might explain some of the mixed performance in sales. Perhaps most interestingly, that report also showed that while both new and existing home sellers will sometimes market mortgage rate buydowns to incentivize buyers, the share of new homes with this incentive is nearly 4 times as large as the share among existing homes. Put simply, if you're after a seller-funded mortgage rate buydown, you're more likely to find it in a newly built home. Realtor.com January housing data show an active start to the year for sellers, with newly listed homes growing by nearly 11% from a year ago. Some of this increase is likely a residual benefit from fall's lower mortgage rates, which could fade. But drivers such as the need for families to adapt to life changes and the easing of the mortgage rate lock-in effect are also at play, and that could mean more lasting improvement. Realtor.com weekly data showed that while greater seller engagement and softer asking prices were observed throughout January, the gap in time on market shrank in each of the last 3 weeks, a pretty positive demand indicator. Finally, I want to highlight the Winter 2025 Wall Street Journal Realtor.com housing market ranking. While many of this quarter's top markets are familiar, including number 1, Canton, Ohio, the biggest climber onto the top was newcomer, Trenton, New Jersey. Affordability continues to be a theme even among top luxury markets, with St. Louis ranking number 1 on the luxury ranking. You can find all the details, including full reports and our housing data for download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates, and Instagram for graphics.